I got started in commercial real estate 8 years ago and knew absolutely nothing about the process. I didn't even know that that industry existed. It's just something that I never even really thought about, right? Like somebody had to put that Walgreens there, somebody put that Chipotle there. So what I figured I would do today is give you the absolute ground zero from the very beginning guide to commercial real estate so that you kind of understand what is going on in that world. So the easiest way to think about commercial real estate is that it is anything that you personally wouldn't live in. Although there are some exceptions, right? Like you could actually buy an apartment complex and live there, and that would technically violate that rule, which defeats the purpose of what I'm telling you, but let's not overcomplicate it, right? Office buildings, industrial buildings, retail shopping centers, you wouldn't necessarily live in those. Commercial at its core is derived from commerce. So anything, any place, any piece of real estate that is intended for a business use. So there you go. There you have it for what is commercial real estate. So anyway, we've got office, retail, industrial, multifamily, storage. It could even be just vacant land. I mean, it could be just about anything. Again, I like to think of it as anything other than a single family home. Now, multifamily apartment complexes, or multifamily technically doesn't start until 5 or more units. So you really have 1 to 4, which is quads, which, a duplex, triplex, quadplex may not necessarily count as commercial real estate, but it could. I count even large-scale single-family development as commercial real estate, as will a lot of other groups and lenders, right? For lending purposes, they will consider large-scale development to be commercial real estate just based on how they will structure those loans. Commercial real estate is vastly different from residential real estate as well. It is a lot more complicated in many different ways, and you're starting off with less knowledge than you likely would in residential, right? Because most people grow up in a home or have a friend that had a home or something to that extent. So you're very familiar with how the residential process works, right? I mean, it's over 50% of Americans own their own home, so you've kind of been through that process before, or at least have seen somebody that has. In commercial real estate, the buyers are very different. Either you're buying the real estate for your business, or you are buying it as an investor. And you just have far fewer people that will ever go through that process. There are very few people that own their own businesses. There are very few people that ever invest. So it's just a totally different funnel. And so you'd be amazed at how many people I come across on a day-to-day basis that have no idea what commercial real estate even really is. So it's fun to talk about. There's always a lot of things going on. The biggest projects that you'll ever see going on in your city are always likely to be commercial real estate. So it's different in the sense that, of course you're likely not gonna live there, but you're also gonna get different loan terms, right? Let's talk about that. That's the first biggest difference, in my opinion, between residential and commercial. In residential real estate, when you're looking at buying a home, you may be able to put 3% down, 3.5% down, 10% down, or maybe even 0% down, depending on the loan structure that you're going with. Well, in commercial, you're almost always going to be putting down somewhere between 20 and 30%, which seems very high compared to residential. Now, there are some exceptions. You can get down into the 5, 10, 15% range, and of course, you could go over 30% depending on what it is. I mean, we're looking at some hotel loans right now that, require 35% down. That's starting to change because the pandemic is coming back, but loans vary drastically in commercial real estate. You could also look at higher interest rates. Right now, I think you can finance a home with an interest rate in the high 2% range, however you want to say that, 2.95% or whatever. But in commercial real estate, you're going to be looking at almost double that. Most of the projects that we're looking at, somewhere between the 3.75 to 5.5% range. So interest rates are higher, and that is because typically commercial real estate is a riskier investment, right? You're not living there. It's not one of the last things that you will give up if you lose a job or come down on hard times. You will likely just default on that loan and walk away, especially if it's an investment. So the interest rates are higher because the bank is taking on higher risk. Loan terms are also drastically different. When you buy a home, you'll probably be able to get a 30-year mortgage. sometimes longer. When it comes to commercial real estate though, you're gonna be looking at 20 typically. And sometimes if you're very lucky and you've got a great deal, you might be able to get 25 years. Now, what I will say, there are some times where you can get 30-year mortgages in commercial real estate, but that is in a very specific set of deals, investments that are stabilized. They're, we're talking 300 unit apartment complexes, and you've got a life insurance company that just needs to park money for 30 years and they're fine doing that with you. I will say this, there's always gonna be an exception to anything I say, so don't leave me a comment saying, well, hey, you're wrong, I got a 35-year amortization on my loan term. Obviously, there will be exceptions. Everything in commercial real estate is negotiable. Maybe you found a private lender that was willing to give you terms that a bank never would. I don't know your specific situation, so I will give that one caveat. Now, commercial real estate obviously has a higher barrier of entry because of that. If you're looking at $1 million property, you're gonna have to bring probably $200,000 to $300,000 down. And that is why most of our deals are syndications, right? I'm going out to investors that are not necessarily accredited. It's people that I have built up relationships with, friends and family, and I'm raising capital from them so that we can go and do all of these deals. And so because of that, the way that we structure these deals is always, it's very different. Check out this video here on real estate syndication where I kind of walk you through that process and how that looks. But unless you have a large stockpile of cash, you're likely going to need investors. Another thing that is very different with commercial real estate loans is that they'll typically only last 5 to 7 years, which is not a very long time. Right? Again, if you buy a house, you'll get a 30-year mortgage, you'll have it for 30 years. But in commercial real estate, you might get a 20-year mortgage, but you can only have it for 5 years. And that is because banks like to turn over loans, right? It's just kind of how it works. So every 5 to 7 years, or again, like I said, it may be 3 years, it may be 10 years. I don't know your specific situation. You're going to have to either sell that property or refinance it. You'll see that very commonly with multifamily. The way that larger multifamily projects work, almost every 5 to 7 years, that apartment complex will be sold because those are investment groups that are specifically doing it for that set amount of time because they get special loan terms. You will also be able to get interest-only periods. You don't really get that in residential at all. You may, of course, but that's more common in commercial. You'll have 18 to 24 months, unless you're multifamily. Sometimes you can get up to 60 months of interest only where you are not paying any of the principal down on that mortgage. You're just paying the interest. So you actually have higher cash flow, but you're not really, paying down the principal, which means that your investors will get a good cash flow for the first 5 or 7 years, and then you'll sell it, pay off the mortgage, give the rest to your investors, and that can actually really help when you're getting up and going. We use that all of the time when we're doing construction and build out on our projects. We actually get an interest-only period so that we can get in, build out the space before big payments start coming in, because that's a lot of money to be paying every month if you're not making any money because the project's not up and running yet. So again, very basic intro to how equity and debt works in commercial property investments. So look, commercial real estate, in my opinion, is far better of an investment than single family homes ever will. I have always maintained that buying a single family home is not a great investment. It should never be your best investment. And that's why I choose not to do it. And I get it. That's a little controversial. Flame me in the comments. It happens every time. There's always somebody that gets just a little upset that I'm saying that. It's probably because they bought 3 houses and think that that is how you invest in real estate. But I'm a big believer in BURL, which stands for buy, utility, rent, luxury, right? And this comes into every aspect of your life. You buy what is going to make you money, right? You're going to spend money on things that will make you money. So that would be buying an apartment complex because it pays you every month. You're going to rent what is a luxury, right? So your apartment, your house, that is a luxury because it is not an absolute necessity. Yes, you've got to live somewhere. That's not really what I mean here. But living on your own, getting your own apartment, getting your own house, that is a luxury. So rent that because it's not really going to give you a return. Now, will you see returns on a single family home over the long term? Of course you will. Will you experience crazy bursts of growth like you're seeing in Nashville, where people are buying a home and flipping it for 25% profit the next year? Of course. Those are the exceptions to the rule. Typically, single family homes appreciate at 3 to 5% a year. The amazing thing about commercial real estate is I can actually get in and force appreciation on that property, buy it for 500 grand, put $250,000 into it, rent it out to a tenant, sell it based on the income it produces for 1.5 million, right? You just cannot do that with single family homes.
I play devil's advocate.
Oh my God, yes. Hold on, Julian wants to play devil's advocate.
Well, first off, I got a mortgage for 35 years, so no, I'm playing.
Yes, mortgage for 35 years. That's a great question. So Julian is asking, can you force appreciation on a house by buying something cheaper in the neighborhood, which I would recommend. If you're gonna buy a home, you gotta buy like the worst house in the neighborhood, the smallest one, the worst one. You never wanna buy the best. And then force appreciation by making improvements to the house, renovating it. Of course you can. The problem with that is that you still have to sell it based on comps in the area. So while I can sell a commercial investment based off of a cap rate and sell it off of the cash flow that it produces, in residential, they're gonna look at comps in the neighborhood of, okay, well, if this house was renovated, this house that was renovated sold for X, this house that was renovated sold for Y, this house that was renovated sold for Z, and they're gonna basically blend those rates and say, okay, well, here's what your house is worth. So can you spend $50,000 on a house renovation and get $100,000 worth of value? Totally. But can you spend $50,000 on a house renovation and get 5 times that back? Likely not. Again, don't flame me. There are always exceptions, and yes, of course it could happen, but it's not typical. So that is why commercial real estate is always a better investment, in my opinion, because you're able to actually get in and force that appreciation, which is pretty cool. Now, either way, real estate is a great investment. Whether you're buying single family homes or you're buying commercial real estate, in my opinion, it's better than stocks, bonds, or other, honestly, even crypto right now, which some of y'all will probably disagree with me on that. But crypto is very volatile. We don't know if it's going to be worth anything tomorrow. Stocks and bonds are also relatively volatile to me because you don't have any control. Bonds are not, right? Because they're just guaranteed by the government or whatever. But stocks, you're kind of at the mercy of whatever that CEO is going to do, right? Look at what's going on with Tesla. That can be good or bad sometimes. You've got CEOs that could get caught up in a scandal that could tank a stock's value. Whereas, if I'm going to buy an apartment complex and I'm going to invest in that, well, I'm controlling that deal, right? So that's why I think commercial real estate or real estate in general is better investment than stocks, bonds, cryptos, even other companies, because you can actually control what is going on. Now, real estate also comes with a lot of tax write-offs and appreciation that you just don't get out of any other investment vehicle, which I think are pretty incredible. So not only can you be making cash flow every month from your commercial real estate investments, you can actually have write-offs and show paper losses every year legally per the IRS code to where you're sheltering that income. So we've had clients develop apartment complexes, and I had one client a few years ago that they built a 144 unit apartment complex. They made about $1 million their first year in operations after collecting all the rent, paying all the expenses, but on their tax returns showed about a $500,000 loss, which is amazing. They paid no taxes that year, and then it carried over to the next year where they also had more depreciation that year and the carried depreciation. So you just think about how amazing and powerful that can be as an investment tool. Not only are you getting this cash, but you're not having to pay in taxes. So that really helps quite a bit. So, basically what you do in commercial real estate, you'll buy a building. I tend to renovate the properties. So we'll do some sort of value add because that is how I can justify getting higher rents from tenants, and then you'll rent to the tenant. You could also just buy the property, keep it as is, and rent it to the tenant at a lower rate. or you could buy land and develop something ground up. There are so many different strategies for investing in commercial real estate, which is always super exciting. Find the one that fits you. Check out this video here where we go into all of the different strategies that you can utilize when investing in commercial property. Now, if you're looking to get started investing in commercial real estate and know absolutely nothing other than what you've just heard me talk about, or maybe some other videos I've got on the channel, or maybe you're reading our blog or whatever, I would highly recommend that you go out and find a partner that is experienced. Because commercial real estate is very different. It's tough to find commercial real estate investments. It just is, because there is no MLS. Like, we don't have an MLS in Nashville. So we go out and we find these deals on our own. I've bought over $30 million worth of real estate this year, and I think it's gotta be like almost 100% of what we've bought this year was off market, which means it didn't have a sign on the ground, it didn't have a flyer on it, it didn't have an email blast go out about it, it wasn't listed online anywhere. We found that deal and did it directly with the sellers. You also need a full team put together. Everything from commercial real estate brokers to attorneys to civil engineers to environmental engineers. I mean, architects, contractors, the list rolls on. I mean, there is so much that you really need to have put together. And not to mention, going through the loan process, banks will look at you totally differently than they do in residential. It is far more on your personal credit doesn't really matter. It comes down to the deal and your personal cash flow and net worth to guarantee that deal. So it's important. You may need a partner to do all of that. And I always recommend doing your first deal, whether that's a value add investment, a net lease investment, or ground up development. Ground up development especially, because there's so much risk you take on there. Go find somebody that's doing exactly what you want to do and figure out how you can partner with them on the deal, because it makes it so much easier to go through the process by learning from somebody that has been there and done that than for you to go out and figure that out on your own. Because trust me, it's going to take you 2 to 3 times longer. You're going to pay way more. It's just not going to be a fun process. So there you have it for the absolute ground zero, starting from the very beginning, intro to commercial real estate. I'm gonna link a video at the end of this that is, you'll probably find it pretty funny after watching the quality of this video, but it's one of my earliest videos that has done really well on the 5 steps to buying your first commercial property. I will walk you through the entire process of what you will need to put together to get that done. So check it out.